Bismillahirrahmanirrahim. Assalamualaikum sir. My name is Siti Nur Adlina Yusrina binti Nur Azizan. So today I will be presenting on impact of world or global recession to the international trade or the international economies. So I will continue with the introduction. Due to outbreak of COVID-19, the global trade economy is anticipated to decline in 2020, where a lot of people just lost their jobs and their livelihoods are jeopardized. It also gives a negative effect to both the supply and the demand side of international trade in terms of product and services. Besides, the pandemic has caused significant disruption and exposed the vulnerability of some individuals and businesses. There are aspects that will be discussed, which is economies of scale, technological gap, economic integration, investment aspect, forex market, and exchange market. It focuses on the impact of pandemic both internally and externally to global expectations. Furthermore, this will investigate to the possible solution to integrate the international market to overcome the COVID-19 crisis. So next, I will be discuss on global recession impact. Firstly is economies of scale. Economies of scales are the concept to expand on the patterns in international trade or in the number of companies in each market. It explains on how the cost advantages of a company gains when production become efficient. During COVID-19, it resulted the small companies and retail businesses being forced to close and must stop accepting order from within and outside the country. This is because economic activity has stopped with the closure of companies and social distancing implemented. This crisis has successfully reversed the economy of scale. It has big impact on small-scale industry to generate a new opportunities for trade and economic development to recover. For example, manufacturing. 3D hubs in Amsterdam has been demonstrating a new type of manufacturing. 3D hubs establish a network of small 3D printing facilities so that product could be converted into software instruction distributed via the cloud to each facility and manufactured in small batches near customers. As the number of cases has increased, hospitals have run out of critical equipment such as face shields and ventilators. Traditional factories have not kept up and it is taking too much time. So some 3D printing innovators have stepped up to assist since the demand increasing. 3D hubs has also established a COVID-19 manufacturing fund to encourage more of type of technology, offering the leverage its infrastructure to produce products near hospital in need. So next is technological gap. Technological gap is where a firm export product until the imitators from the other country take away its market. During the COVID-19 outbreak, most countries imposed restriction on activities affecting the entire product life cycle, including design, delivery, manufacturing, use, and handling across sectors. All the technologies used are frequently tested due to many changes in the product mix to meet all the large demands during the pandemic. Among the biggest requests is personal protective equipment such as boots covers, face masks, hand sanitizers, and ventilators. This is because the pandemic is no longer a rare event. This situation has become an opportunity for this industry to disclose their intellectual property rights for the well-being of public who are facing the difficulties. They need to produce technological designs that can tap into the global market. For example, GE Healthcare and Ford teaming up to quickly manufacture ventilators for COVID-19 patients. Besides, there are lots of types of face masks such as surgical masks, N95 masks, and etc. have been producing based on skilled country that specialization in this and market it to the global. Therefore, this indicates that the product cycle will be disrupted in the countries that are skilled in developing new technologies specific to their products. So next is economic integrate. Economic integrate is a commercial policy process that reduces or eliminates a range of trade barriers among two or more countries in order to advance or protect a set of economic goals. This unites all the countries. The welfare of the country will also be guaranteed and successfully maximized in addition to them for being able to trade their supplies. Pandemic has narrowed down the real gross domestic product GDP in all the countries, including the most advanced countries. As you can refer in the graph, the GDP graph of United Kingdom, United States, Japan and European in the second quarter of 2020 dropped very narrowed, causing the instability of the country's economy. This shows that whether domestically or other countries was already trailing behind in the outbreak of COVID-19. Other than that, all inequalities in integration originally starts from economic factors among member countries that have inhibited trade and slowed down economic growth. Besides, many countries experience negative impacts towards their trade integration. However, despite the impacts, at the same time, the countries involved in able to act in strengthening trade integration while eliminating parts that reduce their trade. This will be able to implement a new trade integration framework that goes beyond tariff. This reduction helps restore the economy for international trade in this phase of the pandemic. So next is investment aspect. The stock market is an important component in development of a country's macroeconomics. Apart from the health and social effects of recession during the outbreak, financial growth of companies and the economic growth of global have been impacted. It has created risky environment as a result of irrelevant blockade implementations and pessimistic economic prospects. Therefore, Financial Times Stock Exchange Bursa Malaysia Kuala Lumpur Composite Index (FBM KLCI), as you can see in the graph, it has been declining since January 2022 due to this pandemic. It faced negative influence that hindered all the economic activities. Since this disease widespread, highly contagious sickness was discovered, filling the investors' mind with negative thoughts and worries. The COVID-19 outbreak impacted the stock market in Malaysia. The KLCI also dropped 20.52% since the beginning of year on March 27, 2022, hitting its lowest in decade. Furthermore, airline stocks were among the worst hit during lockdown due to the pandemic, and blue chip stocks in banking and consumer goods are no exception. Next is the forex market. The forex market is generally based on the international trade between nations. The market usually bets on pairs that highly volatile and unpredictable currency like the market using US dollar currency instead of Japanese yen. Industry professionals and investors will depend on a safe currency that has survived in major gains, even face of possible disruption. Then, due to the lockdown, the pandemic has caused significant economic uncertainty, trade disruptions, and increased the neutrality. The pandemic also will directly impact on its domestic economy, causing massive effects in financial world. Aside that, many businesses and industries have been shut down, which boosts the unemployment rate. The pandemic would be expected dropping in value as economic growth expectation would be downgraded due to the economy shutdown. It also will be reducing demand for local currency and investment funds. In fact, forex market created macroeconomic imbalance towards the currency of stock markets and forex trading. Last but not least is exchange market. Essentially, exchange market is not much different from the forex trading. The exchange market is further explained in terms of financial currencies and the forex trading liquidity. The countries will monitor the rise or fall of the currency due to the increase of cases every day since it is relative in exchange rate. For an example, Euro against US dollar. As you can see in the graph, both are initially weak as the pandemic started. Before the virus reached United States, Europe was hard hit. The euro rose more than 10% against the US dollar from a low point on March 2020 to the end of August 2020. The euro was halted. As from that, policymakers have used a variety of policies to deal with the pandemic situation and resulting financial shock. In a context of capital flows and rapidly depreciating currencies, countries tend to rely on the forex reserve to protect their currencies and provide forex liquidity to domestic industries. Next, I will discuss the possible solution to integrate the international market. Firstly, start making lists of countries that will benefit the country. By narrowing down the list, the country will make better decisions about their economic market. The country can have an opportunity to learn about new markets by entering the smaller scale and can limit the risk for their country. Next is government must prioritize engaging the data sharing and risk areas for the people knowledge in a nation. This is to better manage risk if conditions deteriorate further in the future. It also helps in preventing trade between other nations become worse. Government can also use their industry knowledge to consider risk scenarios and remedies, making the country fully prepared for various hazards other than COVID-19. So the conclusion is, this infectious disease has been in this world since time immemorial. However, the COVID-19 outbreak has a negative impact on international trade to certain events and circumstances for all countries. During the first years of this pandemic, it has caused social distancing, many economic restrictions and restricting people's freedom to go to work. As a result of the pandemic as well, almost all global trade networks have been restructured since almost all the countries' economies are depending on the trade of importing and exporting. Furthermore, this disease outbreak has a positive impact on companies that manufacture medical products. This is because there is high demand for medical products such as ventilator, face masks, and hand sanitizer throughout the country since outbreak of COVID-19. In addition, this method is to some extent able to improve the economy of these companies to survive in the industry for a long time. So, from my perspective, that this subject can improve my knowledge about international economy, where it's involved the economy not only in Malaysia but also worldwide. Besides, this subject also designed to improve students' critical thinking and ability to understand theories or argument presented on this subject, and also it opens students' eyes to how economy works in each of every country. I think that's all from me. Thank you.